But my next guest says this little recent dip does not signal a broader base collapse, and he sees some buying opportunities out there, including in Capri. That was our mystery chart. Simeon Siegel is here with us from BMO. He's senior retail analyst there, and it's great to have you here. Welcome.
Great to be here.
I don't want to start on Capri. That's kind of like it's handbag. I don't know. It just feels, to me, Nike, they report this week. That's the biggie, right? It's a big turnaround story. Where are you looking for opportunities or kind of bellwethers in this space right now?
What's more fun than a mystery chart in retail? Like, come on, like what a way to start. So I think, and as always, great to be here, Kelly. I think that Nike's in this fascinating spot. I think that Nike, and by the way, they're interesting correlator. We just ran a screen of like, look back, the last stock market drop. Where did it take us back to? Capri is back to its 2020 levels. Nike's back to its levels like 3 weeks ago.
Wow, really?
So you like think about how much you actually lost in this setup. Those are two very extremes. It's an interesting dynamic to look at.
Is the whole sector rife with opportunities now because no one's in the mood to buy anything, or are those companies unique?
Nothing. I mean, the investor appetite to take a chance, and I get it, right? I mean, like, it's easy for you and I to say we're not putting capital on the line here behind these words, but the people that are don't want to take that risk. I've never felt more of this Buffett sense of a greedy and fearful scenario where I feel like unless something is perfect, people don't want to bite. And ultimately, that creates opportunity. We're supposed to look for imperfections. And so that's why the Nike and the Capri are both interesting for very different reasons. Nike, we're looking at the appetite to buy any consumer turnaround is tiny, unless you're Starbucks. The appetite to buy something with a lot of change, with potentially a lot of competition, like with a brand that we know and you can see, just go out and look at Hoka and On and you can see the different products.
Right.
It makes it hard, but hard could be the opportunity.
It's almost got to be hard.
And so tomorrow or Thursday, I think we're going to start hearing more of this story. The numbers shouldn't be good. No one's expecting a great result. The question is, are we going to be less bad? Are we going to be good enough?
Right.
And if that's the case, like there will be a quarter, whether it's this quarter, the following, or the one after, where we're going to start watching the stock move.
Can these turnarounds, whether it's Nike, Capri, or I know you like TJX, that doesn't need a
Not
turnaround, but can the turnarounds happen in a tough consumer environment? Would you say this is a tough consumer environment, or is it just a lot of fear that's being priced in right now?
So I'm so happy with how you framed the second half of the question. There is this pervasive sense of negativity. Consumer sentiment is a survey that feels horrible. The results, not as much. And so when we look at what actually happened, if we were to say we're wrapping up the Q4 earnings, which feels wildly backward looking, but that's what we're doing. And if you look at them, they were good. Good to great, actually.
Really?
The average company saw revenues grow, margins went up. It's the guidance that was scary. It's the caution for what we're feeling and where we're going to go now. But one, companies are always cautionary at the beginning of the year, as they should. Two, we do have macro stuff to wonder about. But three, and you and I started talking about this dynamic about a year ago, what we're seeing differently than what we saw during COVID is we're seeing winners and losers emerge. We're no longer seeing this cluster. In COVID, everything was either winning or it wasn't. Now we're seeing operators. Now we're seeing execution.
Speaking of losers, what's going on with an Abercrombie suddenly? Like, where does a Lululemon fall? It does feel a little confusing.
And so that's really interesting because you're talking about companies that took valuation growth. You're talking about companies that had this dramatic hope. And that's the opposite of a turnaround where you're watching this come down. And so the other question is when you're investing, do you want to take the risk of a multiple? Do you want to say, okay, I'm willing, TJX, not a turnaround story, high valuation story, shouldn't be any surprises. Are you willing to keep paying up? Or do you look for things that are sitting in the dirt? The ones you just mentioned, Lululemon has been a growth favorite forever. And the question is, do we stretch too far? And so I think there's a lot of really interesting things. Everything fell. So right now, across retail, everything fell.
Would those be your top three, TJX, Capri, and would Nike be a top three right now?
Yes, so I would put Nike in as a durational call. You have to be able to say, I believe that Elliott Hill, I believe this new product launch is going to start getting us back in. We did a report about a month ago, probably. It was a fascinating report where we found that the challenges Nike faces right now, and you and I talked about them, are the same they faced a decade ago against Adidas.
Wow.
And just as the problem is the same, the fix will be the same, and they're doing it. What's that fix? New product, great storytelling. What makes Nike so special? The fact that they've got a lot of money to spend. Once they spend it and deploy it, it's very hard to fight against them.